Hello, I'm Anthony Curcio, a senior partner at Summit. For more than 2 decades, Summit has been at the center of credit subsidy and risk estimation for federal lending. Recently, we sense a coming explosion of innovation in credit subsidy modeling, risk analytics, and reporting, and we've recorded 3 conversations to talk about why innovation is needed. First, a little background and history. The U.S. government is one of the largest lenders and credit guarantors on Earth, with more than $5.2 trillion of risk on the balance sheet. This includes more than 24 active loan programs, and some of them are enormous. For example, the lending operations at USDA alone is as large as a top 10 commercial bank. Since the passage of the Federal Credit Reform Act of 1990, risk modeling has evolved through several phases. The first 10 years after FCRA introduced the first generation of present value scoring and risk analytics. Model quality for these early implementers was mixed at best. They lacked automation and were often handmade. Most were built in Excel or even Microsoft Access. In the early 2000s, Congress created more energy and infrastructure programs. These issued large loans to institutions, not citizens. This decade also brought the first widespread use of econometrics and sophisticated predictive modeling, going beyond the use of historical averages to predict loss. From the 2008 financial crisis through COVID, Congress greatly expanded the use of credit by both creating new programs and expanding existing ones. This spike of activity brought investment in a new generation of modeling and analytics. In the last few years, the President and Congress have doubled down on using credit for energy, infrastructure, and nearshoring of manufacturing, attracting policymakers with very strong backgrounds in finance. While some progress has been made, modeling and analytics for risk-based budgeting just hasn't kept up with the private sector. After 35 years of FCRA, too many federal credit programs still rely on disconnected spreadsheets, legacy systems, and manual workflows. This is just inefficient and prone to error. Federal agencies still often lack the in-house technical expertise or bandwidth to build, maintain, and update complex credit models, limiting their ability to perform timely re-estimates, scenario analysis, and policy simulations. Diving into challenges like these, which are indicative of legacy solutions, is why we're having these conversations. But don't worry, we'll also include a hopeful vision into solutions that address these challenges head-on. Kate Lynch Machado, Summit's Director of Strategic Growth, will lead these conversations. I hope you enjoy them.
Hi, I'm Kate Lynch Machado, and this is the second of a 3-part conversation about the need for more modern commercial solutions for managing the federal government's lending balance sheet, which exceeds $5 trillion. This episode is all about the level of domain expertise needed to design and deploy a new generation of solutions to the problems we discussed in our last conversation. We'll explore why deep FCRA expertise is essential and why generalist automation approaches may fall short. Joining me today are 3 guests. First up is Anthony Curcio. Anthony is a senior partner at Summit and seasoned leader in federal credit policy and budgeting. He's known for his work simplifying complex federal financial systems and has served as an underwriting instructor for several infrastructure programs. Anthony brings a unique blend of technical expertise and policy insight, making him a trusted voice in federal credit reform. Next, we have Sarah Cunningham. Sarah is a partner at Summit and a former chief of OMB's credit crew. She oversaw the entire federal credit portfolio during the Great Recession and later supported HUD's $3 trillion portfolio as HUD CFO. She's led design, implementation, and modernization of credit policies and programs, including the second-generation OMB credit subsidy calculator, credit performance scorecards, and budgetary accounting for better estimates to inform policy decisions. Today, she supports a wide range of credit programs and is leading voice in federal credit policies. Finally, we're joined by Albert Lee, Summit's founding partner. Albert is a respected expert in federal credit modeling and deployment. Albert has led numerous engagements focused on designing audit-ready applications and integrating SME oversight into automated systems. His work ensures that technology complements, rather than replaces, domain expertise. In our last conversation, we did a deep dive into the key pain points suffered by many federal credit lenders and why solving them is so critical. These challenges included technology debt, key person dependency, siloed data, and data sharing challenges which produce data quality and manual databases. So today we're going to continue that conversation, and we're going to talk a bit about the urgency behind modernizing federal credit systems. And our guests are here today to have that conversation because we have experts on this, this is a bit about domain expertise. We're excited to have them here. Question one is really about, is domain expert-driven design critical when building applications for the federal credit modeling and audit compliance? Is it possible to grab standard fintech solutions from the banking industry and plug them right in? So Anthony, you have spent 20 years bringing private sector expertise to and best practices to federal credit. Will domain expertise still be needed in a new generation of solutions, or is it over-reliance on domain experts part of the problem?
The question that you're asking about domain expertise, I also want to talk a little bit, if I could, about commercial solutions. People ask me all the time, Anthony, shouldn't commercial solutions be, or let's say existing solutions that are already within fintech, shouldn't we be bringing those on board? And my response is, we've been trying to do that for 20 years. Like, welcome to the party. We've been trying to do that for a very long time. There's a reason that they're not here now. And until we correct or understand those reasons and reform, we're going to continue to get the same outcome. So really, there's two things that come to mind. First, if I could just talk about existing systems. The financial industry has created some pretty amazing risk analytic tools, and there's a lot that we have learned and will continue to learn from them. But at their the way they present now, they don't understand federal budgeting compliance. They don't understand federal auditing compliance. Most of their designers have never heard of FASAB. They've never heard of OMB. They don't understand the importance of interfacing with the CSC at OMB. Fintech is focused on profit, which is fantastic. That's what they should be focused on. Federal programs are focused on mission, and people want to measure that and understand what the impact is. And they're focused on budget. Budget matters, and saving money and reducing budgets matters. But mission and budget are different than profit. It's not better or worse. It's just very different. And so what we need to do, if we want to, as an industry, stand up a commercial off-the-shelf product, we're going to need to take the best that the private sector has to offer, but we're going to have to infuse it with sensibilities around audit standards, budget standards, mission, and basic compliance issues. So that's kind of the first big thing. And then let me go to domain expertise, and then I'm dying to hear what Sarah's got to say about this, and Albert too, because we've been hanging around about this for 20 years. But federal credit is always going to need domain expertise. And the reason is because sometimes I call federal credit loan programs sort of like the island of lost toys. The reason that they're federal loan programs is because the private sector can't or won't issue these types of credit products. And so they're unique, they're quirky, they're weird. And we're going to need domain expertise to guide customization, implementation, and explanation to policymakers and our regulators at OMB. When we present OMB with a credit subsidy rate for a new loan product, let's say for onshoring critical supply manufacturing, and they say, where did you get this subsidy rate? If we say it came from the black box, that's not going to work. We're going to need to explain to them exactly how those numbers were put together. And of course we're using automation, and soon we ought to be using generative AI, and we will. But even with that, we're going to need to explain and interpret those results, or they will never be trusted. So those are some of my initial thoughts.
Yeah, great. Thank you so much. Are there, Sarah, I know you have some thoughts about this, and we can certainly have that conversation now if you're up for it, or we can pass it to Albert.
Yeah, either way, I think one of the things that I think is really interesting about what you said before kind of diving into the domain expertise as well is thinking about it from a perspective of public trust. Really, to be able to get the public trust, you need to have credible data. To have strong decisions, you need credible data. And to be able to implement a program, you need to have the context about what that program is looking to do. You need to have systems that align with it and are capturing things that are relevant for that program. But there's still a whole lot of standards out there. There's a lot of things that's common across every credit program. So it doesn't mean that it's insurmountable or you still need a separate technology thing for everything. You need a platform that focuses on what's common so that you can build from there. The nuance can build from the common as opposed to, kind of everything getting jumbled up. I really also like, Anthony, what you were talking about in terms of, when the regulators come to town, when OMB is asking, when agencies, OIGs are asking, when other oversight is asking, when Congress is asking, you need to be able to show your work. You can't just kind of say, yeah, this is what I'm doing.
You
right?
can't say Copilot told me so.
Exactly. Like, I'm sorry, but this ChatGPT over here said X. And so, as my background, when I was the chief for OMB's credit crew, the big issue that we had often was we'd see these really complex models and we say, okay, can we lift the hood? How did you get to this assumption? And if they couldn't tell us why, it was really, really hard for us to be able to advise policy officials on, yes, this really great idea that you have to lower fees is going to result in more access to credit, but we can't tell you anything about what's going to happen to the risk. We can't tell you what's going to happen about anything your cost. That's not going to satisfy the policy argument. And the same thing when you think about it from the oversight perspective, at the end of the day, ultimately, agencies are responsible for credit modeling subject to OMB approval, and the numbers are used to drive critical decisions. And as every good oversight agency knows, there has to be a person that's accountable. There has to be somebody who they can look to and say, how did we get here? What decision was made? What's the documentation? How do we do that? So somebody needs to be accountable. Now, what the technology and automation offer is a way for us to take that domain expertise, and instead of having them spend all of their time on manual processes, like pulling data from accounting to budget to program, back and forth, and translating and trying to figure out, well, what's the right number? We can use the intelligent automation. We can use standard products to be able to take that domain expertise and use it in better ways, to be able to take and do analytics across the portfolio and understand what's happening in the program.
That's great. And Albert, one of the things I've noticed that Sarah mentioned quite a bit was data. And so I would love it if you can add a bit about domain expertise around the data aspect. What is needed? Is it still important?
Enormously. So, reflecting up on my career a little bit, Anthony and I had been building, a number of federal credit models, in a number of different agencies. Interestingly, most people actually start with single family and then they move to multifamily. My career is I did multifamily first and single family and then, farm loans. The reason why that I kind of mention all these three separate products is because domain expertise tells you how they need to be modeled differently, right? The motivations for default and prepayment for single family is going to be very, very different than the motivations for defaulting or prepaying a multifamily loan. The economics is going to be different, the behavior is going to be different, and so therefore the data needs to be different. Farm loans, is another product, and then student loans still, you need to take a lot of these industry details into consideration. So domain expertise is going to be very important. But I would also lump domain expertise with experience. The experience that we actually have building all these federal credit model, all these different places, is to allow us to say what are actually the same. So you need to set aside all the things that are different, and they need to be different. But to the extent that there is actually commonality, about these programs, and I think that, these commonalities, it needs to be unified, right? And it would actually enhance the data requirement, the reporting requirement, and then, the audit requirements that Anthony have just talked about. So for us to actually be able to differentiate, all right, these are the differences that it actually take careful nuances, in terms of modeling. I think that we need to set them aside. But to the extent that there are commonalities, across all these different loans, I think that they need to be the same. You talk about data, for example. Like every program that we actually ever work with, almost always has data plumbing that actually undergird the entire model, regardless of student loans, farm loans, single-family loans, multifamily loans. The data plumbing is actually the same, both in and out. So you can actually think about model as a middleware that actually needs to be different because that's where the thinking that needs to be. However, the data engineering that is actually going inside the model and then coming out from the model are essentially the same. And so those things that actually be uniform and unified. So the right mind space can actually be devoted to the things that it is actually need to be different, like answering Sarah's question, like why are you modeling student loan this particular way? Then we can actually talk about the servicing details, what actually motivates student loan prepayment and other things that can be very, very different from one product to another. And I think that, we can focus our energy and our attention, to the intellectual property, if you will, of where the model is. Whereas the plumbing, once it is done, you probably don't want to touch it because you know that it is working. And so the OMBs of the world and the agency management of the world can properly focus their attention on some of the nuances.
And if I could riff off of what Albert
Absolutely.
said a second, part of the thing I love the way, Albert, you described what is different and what is common to federal credit programs. The other thing that's common, I'm going to go back, is our regulator, and knowing, understanding what their important role is at OMB and the questions that they're likely to ask that springs from the law and from their circular, is we're gonna know those common standards amongst different product types, or we're going to have a same type of oversight and understanding that and building that in. But anyway, I know you've got more questions to ask, Kate, but I had to throw that
Can
on
I
there.
do one little riff off of that too, real
Yeah,
quick?
you go.
To build off what Anthony was saying and Albert's great point. The other piece is when you think about audit and oversight, when you've got a focus on the common, you've got kind of that common basis, it enables audit to also be forward-looking. So instead of asking a bunch of questions on internal controls and did you put the right data point in, they can rely on the automated controls and those automatic testing that's able, and then the auditors can say, okay, let's look cross-cut. What's important about housing programs that we need to know?
Right.
What's common, being able to look at the common data across enables a more modern approach to oversight that gives us insight for being able to drive program improvement too.
So I will add this too. The dirty little secret about federal credit modeling is 80% of the time and the energy is actually going into the infrastructure. And about 10 to 20%, and maybe 30%, if we are lucky, is actually going into the modeling. Because the engineering, the data engineering is actually so complex. But if that's the common data element, right, it would be a pity that we would actually need to build that foundation again and again and again and again and again.
Absolutely.
Because, the...
I think we're all going to go amen on that.
That's right, because, somehow that, that platform is not portable. Imagine a world where that data platform is already established, right? You audit the data platform as its own independent thing, but once. And then you focus the energy and the attention on the nuance, on the program details, on the things that is actually legitimately different, right? I think that, there is an economic efficiency argument here as well.
Great, thanks. I appreciate that discussion because it leads us to the next question, which is really, really related to some of the things you've already talked about this morning. Part of that is applying technology to the credit program challenges. Do we still need humans? Are humans still part of that process? If so, what kind of domain expertise are critical? I think we talked a bit about that in our answers on the previous question. Sarah, as you know, your OMB background, head of the credit crew, you bring a very, very deep knowledge of this and kind of what's been done in the past and kind of thinking about, I'm sure, late nights when you're working on those bespoke models, what we can do differently. Can you give us an idea, will technology supplement humans or do we still need those humans?
We absolutely 100% still need humans throughout the entire life cycle.
That's good news.
Yes, so we are not going
As a
away.
human, I'm glad to hear that.
Skynet will not be able to take over credit modeling and decision making. effectively, expertise still will be needed, and it takes a village. It takes program experts, it takes budgeteers, it takes accounting experts, it takes customer service experts and people that understand what's happening with the end borrower, what it looks like, other stakeholders in the program, to be able to help define what are the key business events and data points that are most important, so that they can feed into that middleware, into the modeling, and to help make sure that the reporting is timely and accurate and we're interpreting it correctly. When we're also thinking about this, it's also critical to have the humans so that there can be the change management. One of the sticky things that we talked about a little bit in our last conversation was the technology debt. And a large reason that we have technology debt is it's very sticky. If you've got a very little bit of money, and many of these credit programs are under-resourced, or they've got very limited resources for program administration, sometimes the model just isn't the highest priority. Sometimes there's other things that take precedent. And so if there's a way to have something that's more based on standards, it reduces some of that friction. It makes the change management easier, and it allows us to really take advantage, so that domain expertise, to Albert's earlier point, is spent on understanding the program and answering the big picture core business questions, and less time on the data engineering and is this data point right? Did I get it from the right spot? It also enables us to build, leveraging technology, build a common source of truth, so that the program people, the budgeteers, accountants, oversight, they can all be looking at the same data points for the program, as opposed to explaining away small timing differences or things like that, or getting caught up in small things. And beyond that, thinking about what the public expects. You know, the public is expecting more and more, since the Evidence Act, to be able to access government data as a public good, to analyze that data without even touching the data, using tools like AI, ML, ChatGPT. I should be able to kind of go up to Microsoft Copilot and say, hey, tell me all about student loans. And so to be able to enable that, the data needs to not just be put in a format that can be read, but it also has to have domain experts to say, here's how to interpret, here's the complexities of the data. Otherwise, you could end up with very, very weird and wrong information coming out from somebody trying to access data that is public and understand how a program is doing.
And Kate, I'm inspired by Sarah's words there, and particularly this year, and we've just had an administration change, a pretty strong shift in policy emphasis, for sure. And I think that especially in federal credit, the American people decide who the Congress is, and the American people decide who the president is. And it is our job in government and federal, and especially and including in federal credit modeling, is that we need to help those new policymakers when they come to town to do what they want, and they need to do it quickly. They have presidents and their appointees have a 4-year perspective. Some of them are not even in their chairs to 3, 4, 5, 6 months into that administration. They need to move quickly. And I think the human element there is going to be able to say, I understand your policy objective. I also understand our models, and I understand the power of automation and machine learning, and we can configure or reconfigure this program. You can't reconfigure a program without reconfiguring the modeling, not if you want the right answers. So I do think that having people in the mix makes these automated systems more nimble and more reactive to policymakers who may be bringing us policies that look very different than the previous administration, and who want to move quickly and deserve fast action, frankly. So I think that maybe I'm going back to the domain expertise here, but I do think that people and domain experts who understand the models, understand the mission, and understand the product. What are the terms and conditions of the loan? Understanding the product, the loan product, is going to be really helpful in helping that new policymaker to turn the ship quickly.
Yeah, that's very helpful. I also think, too, as you guys are talking about how to use technology and humans together, part of that is that the humans may find this more of an interesting task when they have the ability to use technology to kind of advance the product forward. And I think of our NAS project and how the automation helped the staff members feel like they can do the strategic thinking that they were really wanted to do. And so part of that is like the human expertise is necessary, but it's also going to be a bit of more of a joy to go to work and have to think about things differently.
Right, right. Yeah, you want technology to actually do the right amount of substitution, not the wrong amount of substitution. And let's say, for example, AI and ML probably, has the greatest efficiency promise, if you will, right? If you just can kind of like think about it, having a platform, a common platform that, AI and ML, can be used across a whole host of loans. Because what we need to remember is AI and ML, they are methodological in nature, right? They transcend any particular type of program details and so forth. The way in which that AI is going to be used for student loans or farm loans or home loans, the prompt needs to be different, but the underlying technology is the same. So if we were to artificially segregate them in different platforms, then AI, as efficient as they are, would become duplicative. Mm-hmm. Because you need not just one system, you need multiple systems. As many platforms as you need system. So stitching some of these things, together is kind of key. And you need human to actually make that decision. You need human to be able to decide the point and the line drawn where things needs to be the same, where things needs to be different. And then, they need to be the same or different, for good reasons and probably for policy reasons, so that, we would be able to actually explain to the policymakers.
Yeah, no, thanks. And I think that leads us to the next question, because I think our intro with the bio, your background, obviously you're a PhD economist, and econometrics is really your gig. And, thinking about how econometrics and predictive modeling fits into federal credit loan modeling. Wondering if there is a way for you to give share your expertise on whether domain expertise is necessary, particularly in econometrics.
Oh, yeah, I think so. So econometrics is fundamentally, a discipline of economics, and economics is really about studying behaviors. And so financial behavior for sure, but so, knowing exactly what makes people behave in a particular sort of way as it relates to loans or credit products, it's going to be very important, right? Like say, for example, we can actually just talk a little bit about, defaults behavior, for single-family loans and multifamily loans. Multifamily loans, it is something that, you don't necessarily live in. Is essentially, you can think of it as a small business. So the way in which that cash flow is actually coming in and the underlying asset value is enormously important. So Chuck Capone and Goldberg, back in the days actually wrote a paper about describing for a multifamily loans, the condition under which that would actually make a default much more likely. Pure economics. On the other hand, when you kind of like think about a single family default, it's a very, very different, type of modeling strategy, right? You're living in a home, so you'll probably have some emotional attachment to the place that you're living in. And so more likely than not, the things that is actually make people default on a loan, it's outside forces, is whether or not you're being employed, whether or not the macroeconomics, is in a particular sort of way. So what drives that default decision? It's going to be, very different. As an econometrician, as an economist, we need to, understand that very well. And then the last thing that I'm going to say is about, student loans. Student loans is even more complex. The reason why it is complex is because the servicing rules are so different. So you are not really thinking about the individual behavior as much as you have to think about the nuance of the industry, the nuance about how servicing is done among student loans and what are the rules and the conditions. Again, you need a good econometrician, you need a good economist to really be able to kind of like, sort that out.
And quickly, can you give us a sense of how that wonderful expertise that you have and how you described it and how it's really, really deep into different types of loan programs and different types of scenarios fits in a cloud-based solution. How do you wrap those two together?
Oh, the modern days the modeling cannot be done anywhere else. Like, so when I actually first started my career, which is referred to at the beginning of the big data revolution, the desktop or maybe the servers, which just happens to be large enough to handle the data that we have right now. The single family loans that we are modeling right now involves 300 million mortgages, their monthly performance. The volume of data that we are dealing with right now is just unthinkable even 20 years ago. In the absence of clouds, you would not be able to do that.
Albert, do you remember the days where in the corner of Summit's office we had those cores stacked up to the ceiling?
That's right.
Running those
That's
computational, and they run all night.
Yeah, they run all night, and then you need a special cooling system, for them to cool. People don't even think about the size of the data anymore. It's just because that cloud computing is so accessible. But again, it's a matter of substitution, right? So we need cloud engineer to be able to effectively model things that we need to do. It goes back to that platform question again. It's because once you actually have cloud is ubiquitous, right? Once you actually have access to it, you don't want to have multiple access to it. I mean, the same cores, can actually process the information regardless of what you happen to be modeling. So,
well, this has been a fantastic conversation. I hope that focusing on how a new generation of applications should be paired with domain expertise was helpful. I want to thank all three of you for joining me today. Please join me soon for the third part of this three-part series where we will wrap up the conversation. When solving these legacy problems, how must program leaders and procurement officers think differently when procuring a new generation of software, which is more commercial? Join us for the next conversation to find out. Until then, thank you for listening, and as always, reach out and let us know what you think.